All right, some important news coming in relation to Prakash Industries. Good news, rather. SEBI has lifted all the curbs imposed on the company. Do remember back in August, SEBI had actually suspected the company of being a shell company, while, of course, the SAT had subsequently put a stay on that order for a couple of companies. Prakash Industries now has finally, it's confirmed that it's no longer a shell company. And as you can see, the stock price is duly reacting to that news piece. It's higher by 4.7% in such an important time. It's important to get in the chairman of Prakash Industries, Mr. VP Agarwal. Mr. Agarwal, congratulations. All the doubts cleared. Your company is no longer affirmatively a shell company. I'm sure you must be very relieved. Tell us, what was the procedure and process that SEBI followed? They did not find any prima facie evidence against the company.
At the outset, I would really like to thank SEBI for revoking their earlier order, which was inadvertently issued by them. So originally when the order came, the SEBI and the stock exchanges also stopped the trading. So we did went to the SAT, who gave a great relief to the company immediately, and our trading was restored. And after screening our 25 years of records and all the expansions and all the processes, they finally then they gave a detailed order last week, and we are very happy that the shareholders' confusion is taken away, and the confidence is restored, and all the stakeholders should be happy.
Good morning, Mr. Agarwal. Thank you so much for joining. This is Ajay joining from the research desk. In fact, we did broke the exclusive story on our channel. One, of course, that the market should be bracing for regulatory relief, which has now come. And not only that, even marquee names like Rakesh Jhunjhunwala were increasing stake in your company. So some analysts always believed that regulatory relief is also in the offing, and it was a misplaced notion that yours is a shell company. But I must say, sir, that between that order and this, the other businesses have actually panned out. You've taken measures to unlock value for shareholders. Demerger has come through. And we are also getting to learn that you are being approached by strategic investors in your PVC business. So tell us how the business has grown since then till now. A lot of positive news flow is what we are gathering.
You are right. As we all know, the steel industry is growing faster now, and so is the prices in the market. As we know that China is cutting their production, and India has almost exported 10 million this year. With this, there is a shortage in the market, and the prices during last 1 month have gone up by 6,000 rupees per ton in our long product range also. So with this kind of demand going up, GDP likely to go up next year, and there is already shortage, and international market being very good, we feel that the scenario is very bright. Also, the steel ministry, they have come out with the steel demand projections, and they have projected 300 million tons demand for next 10-12 years. So by 2030 they have projected 300. So there has to be, presently the capacity is about 125 million, and actual production is about 100 million. So huge capacity creation is required, which is unlikely, looking into a lot of steel company under stress, and new greenfield projects not coming up, and most of the brownfield they have already expanded. So looking in that scenario, there is a growth trajectory likely to be there in those who can improve their capacities. So based on this situation, if you look at the prices have gone up by 15% in this month, and the margins of the steel industry has gone up. As we had reported earlier, our margins were in the range of 17-18%. Which now in this quarter are likely to be much higher in view of the better sales realization. Also, further I would like to tell that the coking coal prices internationally now are again going up, and so is the thermal coal prices. Whereas our company is not affected. We are through the sponge iron route, not through the blast furnace route. So our whole coal is thermal coal, and which is fully committed from the Coal India Limited, the long-term coal agreements. We have a fuel supply agreement for 5 years at a stable price. So based on that, we are very happy that while the cost of other steel producers are going up, we are able to produce at a cheaper rate. So with this scenario, we feel that we should be expanding. So last year, we have added about 20% in our capacity. We completed the 5th kiln sometime in April 2017. And now the next phase of expansion is going on. And the 6th kiln is likely to be completed by September 18, which will take the company from 1 million ton to 1.2 million ton capacity. So at present, we are operating in the average rating of 1 million annual capacity.
I understand, Mr. Agarwal, that you also wanted to double your double the PVC pipes and the fittings capacity. That's of course for the next 2 years, but how is that going on? And also, you spoke about the coal linkage, the linkages as well that you do have for your plants. So is to what extent is the requirement, your requirement, covered by these linkages?
For our steel production, 100% of our requirement is covered. We have about 1.56 million ton of coal linkage, and that is fully covers our steel requirements. And sometime there is some short-term gaps which we take from the spot, some 5%, 2%, wherever there is some supply chain issues. We do take from the spot, but generally our price, which is in the linkage, the prices are 20 to 30% lower than the spot market.
Mr. Agarwal, like Ajay was as well pointing out.
Also, you have referred to.
Go ahead, Mr. Agarwal.
Yes. You have also pointed out the demerger. Yeah, you have pointed out the demerger of PVC unit. That is fast apace going on. The SEBI approval is awaited. It was perhaps kept pending because of this recent SEBI order which we have received. Now the approval will come by next week, and we are fast apace moving ahead on that demerger. So by middle of next year, we are hoping that the demerger should be complete and should be happening. PVC unit has a very good growth rate of about 35%. And we have a brand equity because we are there for last 30 years in the market. So in the North India and the Central India, we have a very good brand image of about 15% price we get better than our competitors. And that's why
in fact, that's the reason why, because you have such good brand equity, because you enjoy such good growth very quickly. Like Ajay said, there was a cover, on the last street, was an ET Now exclusive that, there may perhaps be a possibility that your PVC pipe business is actually being approached by strategic investors. Very quickly, if you could say if that's a route you're mulling.
At present, we are not looking into it because we are increasing the scale already. So at the present valuation in our PVC, any divestment would not be preferred. I think in another, first let the demerger happen. Thereafter, we conclude our capacities to a higher level. And at the right time, we will go in a separate entity. Once the demerged entity is listed in the stock exchange, at that time, we will take that call.
So great news, I guess, for Prakash Industries, not only from the SEBI's perspective, but also now it paves the way for the company's restructuring to essentially go ahead. You will get the nod, there will be the listing of the PVC business. So a lot of value unlocking for shareholders. And, we at ET Now as well told our viewers first about this positive development that could come by for Prakash Industries very soon. So Mr. Agarwal, thank you for giving us your time on ET Now, explaining to our viewers what exactly is the way forward for Prakash Industries. And we wish you all the very best, sir.
I want to add one point that the Odisha government had given us iron ore mine,
Right.
which likely to also start
Okay.
operating from April 18. And also from Chhattisgarh government, we have got iron ore mine, Kavardha mine, which we are likely to operate from April 2019. So with these cost-cutting measures and the growth and the margin improvement, we are feeling that and the demand being robust in the Indian context, I think the company for a long period of time is likely to grow the PAT as well as the turnover. Thank you.
I guess with the rising iron ore prices, it's worth fitting that you get these mines from the government. So good luck with that. Margin improvement exercise underway, cost-cutting measures as well underway. Thanks so much, Mr. Agarwal, for joining us.